Welcome back to XRP Spotlight, everyone. I hope you're having an amazing day wherever you're watching from. We have a lot to cover because XRP is once again sitting in one of the most uncertain environments we've seen in months. Prices are bouncing around. Bitcoin is struggling to regain momentum. Fear levels remain elevated. And the market can't seem to decide whether this is the start of a recovery or just another temporary fake out before another move lower. If you're an XRP holder trying to figure out whether the bottom is in, whether 10-cent XRP is realistic, and whether the Bitcoin fear flooding social media actually matters, this is the update you need to watch all the way through. Right now, XRP is trading around the low $1 range after a sharp sell-off that pushed it down toward the $1.15 area before buyers stepped in. On the higher time frames, XRP is still largely moving sideways after recovering from earlier lows. That's the key point. Despite the dramatic headlines, the weekly structure hasn't completely broken down yet. We're seeing volatility, not a confirmed long-term collapse. At the same time, Bitcoin is sitting just above the low $60,000 range and still acting as the dominant driver for the broader crypto market. A lot of people keep claiming that XRP has already decoupled from Bitcoin. I don't think the evidence supports that yet. XRP still reacts to major Bitcoin moves, and until we get stronger utility-driven demand, ETF-driven scarcity effects, and clearer regulatory frameworks, Bitcoin remains the tide that lifts or lowers most crypto boats. The fear and greed index is still sitting in extreme fear territory, and that tells you a lot about the current market psychology. Investors aren't acting as if the next breakout is guaranteed. They're acting as if they don't know what happens next. That uncertainty matters because markets hate uncertainty. When traders don't know whether they're facing another leg down or the beginning of a recovery, they reduce risk, lower position sizes, and wait for confirmation. Once confirmation arrives, sentiment can change very quickly. We've seen this repeatedly throughout crypto history. Fear can persist for weeks, then disappear in a matter of days once price action and news flow align in the same direction. One major reason uncertainty remains high is the broader geopolitical backdrop. Markets are reacting not only to crypto-specific developments but also to global news involving military actions, energy markets, and macroeconomic risk. Recent headlines about U.S. strikes related to Iran, Iranian responses, and the possibility of escalation have pushed investors toward caution across multiple asset classes. What's important is that this isn't just a crypto story. Equity markets, commodities, and currencies have all shown sensitivity to these developments. We saw large intraday reversals in major stock indexes as geopolitical headlines hit the tape, wiping out significant market capitalization in just a few hours. Crypto is being dragged into that risk-off environment, which helps explain why even positive crypto news has struggled to generate sustained momentum. That broader uncertainty is also colliding with another major crypto catalyst, the Clarity Act. According to recent reporting, White House officials and law enforcement groups have continued discussions around provisions related to illicit finance concerns. The frustrating part for many investors is that crypto legislation has already gone through multiple rounds of negotiation, public support, committee votes, and revisions, yet the process still isn't finished. Supporters argue that the framework is necessary for U.S. leadership in digital assets. Critics want stronger safeguards around compliance and enforcement. The result is continued delay, and markets are treating delay as uncertainty. Every additional round of talks increases the odds that traders stay cautious rather than aggressively positioning for a breakout. Meanwhile, the narrative war inside crypto is getting louder. On one side, you have analysts calling for major upside targets later this year. They point to possible regulatory clarity, tokenization growth, increasing institutional participation, and ETF-related supply effects. You'll hear targets ranging from several dollars to much higher levels if XRP enters a true price discovery phase. The bullish case is that a recovery phase begins soon, then accelerates into a larger breakout once legal and institutional obstacles continue clearing. That narrative hasn't disappeared. In fact, many long-term XRP supporters believe the current weakness is simply the final shakeout before the next major move higher. On the other side, you have chart analysts warning that if key support zones fail, XRP could revisit much lower levels. The most bearish projections circulating online point to the 10 to 14 cent region, often tied to worst-case historical support analysis and broader market capitulation scenarios. Here's my view. I think that outcome is possible in theory, but I don't see it as the base case right now. For XRP to reach those levels, you would likely need a much larger breakdown in Bitcoin, a severe risk-off event across global markets, and a failure of multiple support zones that haven't yet been decisively lost. It's a scenario worth respecting from a risk management perspective, but I wouldn't treat it as the most probable path based on current information. What would I do if XRP somehow revisited those extreme levels? Personally, I would view it as an extraordinary accumulation opportunity rather than a reason to panic. That doesn't mean blindly buying every dip. It means recognizing that a move from around $1 to around 10 to 14 cents would represent a catastrophic repricing that would likely occur during a broader market panic. Historically, panic phases have produced some of the best long-term entry points in crypto. The key distinction is between temporary mark-to-market losses and permanent losses. You don't realize the loss unless you sell. The market can absolutely move against you in the short term. The question is whether the long-term thesis has actually broken, and at the moment I don't think the evidence shows that it has. It's also important to understand that many analysts who mention sub-$1 targets aren't saying those targets are guaranteed. They're saying those levels remain possible if the market continues deteriorating. That nuance gets lost on social media. A lot of viewers hear 90 cents possible and translate it into 90 cents certain. Those are very different statements. Markets move on probabilities, not certainties. XRP could just as easily reverse higher from current levels if Bitcoin stabilizes, geopolitical fears cool, and regulatory headlines improve. That's why I keep emphasizing flexibility. Don't marry one scenario. Prepare for multiple scenarios. One data point that does support the longer-term bullish case is continued institutional interest. XRP-related ETF and ETP activity has remained meaningful even during red days. The institutions aren't waiting for perfect price action before getting exposure. They care about long-term positioning, liquidity, custody, regulation, and portfolio construction. If spot products continue accumulating XRP over time, that can gradually remove supply from the market. $100 million of daily volume doesn't mean $100 million disappears forever, but sustained institutional demand can tighten available liquidity, especially during strong uptrends. The important thing is not to overstate the effect. ETF flows matter, but they don't magically guarantee immediate price explosions. Now let's address the fake-out question directly. Could this recent bounce simply be a relief rally before another drop? Absolutely. Markets often bounce hard after oversold conditions, then retest lows. We've seen that pattern across multiple crypto cycles. The real confirmation would be a series of higher highs, higher lows, improving breadth across major assets, and sustained strength in Bitcoin. Until then, calling the bottom with certainty is premature. At the same time, declaring that the bounce is definitely fake is equally premature. The evidence right now supports uncertainty, not certainty. That's why traders are frustrated. The market is giving mixed signals. The Bitcoin FUD circulating online is another source of confusion. Recently, viral posts claimed that new AI systems had cracked Bitcoin encryption or hacked private keys. Those claims are not supported by the actual technical facts. Bitcoin private keys are 256 bits long and have not been cracked by current AI models. Some researchers have recovered access to wallets by finding backups or exploiting weak implementations, and a separate small bit demonstration key was cracked in a research context. But that is not remotely the same thing as breaking Bitcoin's cryptography. The correction matters because false security collapse narratives can spread fear far beyond what the underlying evidence justifies. If there were credible proof that Bitcoin's core cryptography had been broken, the market would be reacting very differently. So where does that leave us? I think the near-term market is being driven by three overlapping forces: macro/geopolitical uncertainty, Bitcoin-led risk sentiment, and unresolved regulatory headlines. XRP is caught in the middle of all three. The bullish setup is that Clarity Act progress resumes, geopolitical fears stabilize, Bitcoin holds key support, and institutional accumulation continues. In that scenario, XRP could begin a recovery phase that eventually leads into a larger breakout later this year. The bearish setup is that geopolitical risk escalates, equities weaken further, Bitcoin loses major support, and XRP breaks below current consolidation ranges, opening the door to sub-$1 tests and potentially much lower targets if panic accelerates. If you're trying to navigate this environment, my practical advice is simple. First, don't let extreme headlines make decisions for you. Both XRP to $27 immediately and XRP to 10 cents guaranteed are emotionally charged claims that ignore the uncertainty sitting in front of us. Second, decide your risk plan before the market moves. Know where you would buy more, where you would reduce risk, and what would invalidate your long-term thesis. Third, remember that XRP has a history of moving explosively when sentiment is least prepared. Some of the biggest rallies in crypto have started after periods of boredom, fear, and disbelief. My own stance remains cautiously optimistic. I think XRP is more likely to recover before revisiting the most extreme bearish targets being circulated online. I believe institutional interest, ETF accumulation, utility expansion, and the push for regulatory clarity create a stronger long-term foundation than we had in earlier cycles. But I also respect the fact that markets can stay irrational longer than anyone expects, and I won't dismiss downside risk just because I'm bullish on the long-term story. That balance, optimism plus risk management, is how I approach periods like this. The bottom line is that price uncertainty remains real. A fakeout remains possible. Additional downside remains possible. A sudden recovery remains possible. Bitcoin FUD is rising, but much of the AI-hacked Bitcoin narrative is being exaggerated beyond the actual technical evidence. What I'm watching most closely are Bitcoin support levels, Clarity Act developments, ETF flow trends, and whether XRP can continue holding above major higher timeframe support zones. Those are the signals that will matter far more than the loudest posts on social media. Thanks for watching XRP Spotlight. Let me know in the comments. Do you think this is a fake out before another drop, or the beginning of the recovery phase? Stay informed, stay patient, and as always, let's make a lot of money.